valuations went sky high. People were able to sort of get money because there was so much money over there. And what has happened now is that there's been a total drying up of the space. And so these are people who are on sanctions lists, people who have been sanctioned for either financial crimes or terrorism. Where the money enters the financial system, that's called placement. Once it's in there, they'll move the money around. They'll move it, transfer it from you to him, he'll transfer to me.
Good evening, Mr. Ranjit. Welcome to One Young India. So, I know we've spoken off camera, and you've been that sort of a person who has given me so much knowledge about how finance works, how money works. And I'm so glad that you're here to talk to us today about how money actually functions, like when it comes to cleaning money, when it comes to washing money, dirty money, money laundering, and so on and so forth. So, before we begin, I'd love to know a bit about you. How did your career shape up? How did you land up in this job? Probably a small story of sorts.
Sure. So, I have been working 33 years now, and I did my MBA from the Amos Stuck School at Dartmouth, finished in 1991, and started working in banking. I worked as a banker for 20 years. I worked with the likes of American Express Bank. I was there for 5 years. I was at Deutsche Bank for 9 years, and with Citi for 5 years, and then with a small Swiss bank for 2 years. And then I sort of got to this point in my life where I realized that, I thought in banking, we are doing a lot of, things that were borderline unethical, trying to sell stuff to people. So that was the time that I sort of had a bit of a realization that I wanted to do something different. I wanted to do something be on the good side. So I joined, that's how I got into the world of financial crime compliance, if you will, the anti-money laundering, terrorism financing. And I joined in 2010 March after having worked at the bank over 20 years. I joined a company called WorldCheck, which basically WorldCheck's business is that they maintain a database of all the kind of dodgy people in the world that banks can then use to sort of make sure that they know who they are onboarding as customers. So these are people who are on sanctions lists, people who have been sanctioned for either financial crimes or terrorism. These are politicians are on the list, not necessarily because all politicians are bad people, but with politicians, you have the risk of bribery and corruption and, dirty money coming in. So if you're dealing with a politician, you should know that that's a politician, and the chances are that that money needs to be verified that it's actually clean money or not. So once again, all politicians are not bad people, but if you're politically affiliated, the chances of you having, corruption money or money that's been earned by bribes are pretty high. Then there's a third category of people who are not sanctioned as yet, but people who there is negative news about. So somebody who there's news about the guy having committed a major crime. So he's not on the sanctions list as yet, because sanctioning authorities take a long time before they actually put you on a sanctions list. But your regulators of banks expect you to know if one of your clients has done something and has been in the news for that. So this is what WorldCheck had. And they had started off in 2001, and they were the premier sort of database for this. I worked with them for about 3.5 years. Then I joined a company called the Association of Certified Anti-Money Laundering Specialists. And a lot of what we're going to talk about today is based on what I've learned over there. I spent 7.5 years with them. Then I joined a small startup, which was like the company World Check that I was, except that by then, adverse media, the third category that I spoke about, had become so vast that it's impossible to sort of know everything that's there, negative news about a person. So this small startup was trying to sort of make adverse media easier to use and doing it through using artificial intelligence. They had a great product. Unfortunately, they never got too many customers on, so they didn't survive. I was there for about a year and a half, and then it went down. I currently work a couple things. I work in the cryptocurrency space. There is a certification on cryptocurrency because now, with cryptos again coming on, it's a bit of a cowboy market. It's not regulated at all, and soon your regulator is going to ask you if you're going to use cryptos. If you want to use it, you need to do it responsibly, and you need to know when financial crime is being perpetrated through that medium. So that's a certification that I promote. My main job is with a company called Alia Consulting. We do integrity due diligence. We do work with a lot of private equity funds, banks, financial institutions, the World Bank, where we do these thorough background checks on all kinds of people. The private equity fund wants to make an investment in a company. They would want to know everything about the founders. They would want to know everything about the company. What I mentioned about money laundering, if the proceeds of crime, if the company started with that, or that the investors in there with that, you need to be wary about that. You need to be wary if there's politicians involved. So we do this thorough full check on these guys and give it to the private equity fund so that they can take a call as to whether so this is not analyzing a deal from the financial aspects of it. They do that separately. This is analyzing it from whether you actually want to do business with that guy or not from an integrity point of view. So that's kind of where I am, and happy to sort of talk about anything you want to. I thought we'd discuss money laundering and terrorism financing today.
That's really interesting because now, while you were talking about this, there are names that popped up in my head like Nirav Modi, Mehul Choksi, Malia, that is in the Indian context, Sam Bankman-Fried, right?
Yes.
With respect to FTX. So, fortunately, unfortunately, we have made videos about some of these characters.
Yeah.
One of my students, Arjun, he actually wrote a script for a video that we did about the new money laundering hubs because London was doing this sort of a crackdown.
Yeah.
And I think we'd suggest this video while this is playing on, and probably the viewers can find it in the link above.
Sure.
But then, now you brought me to a very interesting point.
Sure.
You mentioned that there needs to be a check that needs to be done when money is involved. And as far as my understanding goes, the interest rates around the world were very low 2 years back, which is when a lot of money went into the startups.
Yeah.
So, what do you think about that? Do you think that the startup world today is sort of a gateway into this criminal world, or things happen that way?
So, I don't believe so. I think a lot of money was chasing, maybe inappropriate deals, and, valuations went sky high. People were able to sort of get money because there was so much money over there. And what has happened now is that there's been a total drying up of the space and money is not available anymore. So which is why you see all these companies laying off people because they had built up unsustainably large teams because they thought that they could keep getting money, they could build their business up. Now, two things have happened. One is that, with the world returning to normalcy after COVID, a lot of assumptions that were made about, say people picking up, sitting at home, ordering stuff in, or, doing everything virtually, that's kind of stopped. And so a lot of businesses built on that premise have had to sort of scale back. And at the same time, money has dried up. So they've got a bit of a double whammy. Business has slowed down and funding has dried up. So for them to be able to extend their runways, they have to just cut costs drastically. But that's not to say there's inappropriate behavior. So what we look at is, are these guys crooks? Not necessarily. So, and then you talk about a Sam Bankman-Fried, for instance. What happens is people start out, they're perfectly normal. As they get money, as they become bigger, as that sort of happens, they change. And we've seen this happen time and again. People they think they're invincible. They think they can do what they want, and that's what this guy did. And it's now, he built up so much, this thing where ultimately with the Ponzi scheme, which they all collapse at the end.
Yes.
So that's kind of what happened. But that's not to say that if somebody had done a check on Sam Bankman-Fried, before he started, he probably would have come clean. But it's important also, so now that you bring it up, it's not just doing that check at the time that the guy comes on board, it's constantly monitoring him.
It needs to be continuous.
Yes.
So I think that's a great insight. Now, so sir, I would again go back to what the agenda of the talk is. So I think I understand money laundering in somewhat vague terms, definitions. Since you're an expert, I would like you to do a money laundering 101 for us.
Sure. Yeah, exactly. And there are a few of the things that I thought we'd sort of go about. So, let's start with the first slide that I sort of had over here, which was the definition of money laundering. So there are three aspects of it. There is something called conversion, there is concealment, and there is acquisition. So I'm going to read off the exact definition of each of these so that, it makes a little bit of sense. So conversion is defined as the conversion or transfer of property, knowing that it is derived from a criminal offense, for the purpose of concealing or disguising its illicit origin, or of assisting any person who is involved in the commission of the crime. So not only are you as the money launderer, if you know that something is the proceeds of crime and you're trying to hide it, you're guilty. But if you come to me as a banker and the banker turns a blind eye, I'm just as guilty of this sort of, of the conversion. The second is concealment. It's the concealment or disguising of the true nature, the source, the location, disposition, movement, rights with respect to, or ownership of property, knowing that it is derived from a criminal offense. So again, it's, you've got this, you're trying to conceal it. So you're knowingly doing this, or there's a thing called willful blindness, which we'll come to, where you're kind of turning a blind eye. You know that there's something wrong over there, but you don't do enough to find out about it. The third is acquisition. And this comes to, let's say, you're somebody who's done everything by the book all along, but you get a damn good deal. Somebody is selling you a property at half the market value, and you take it without even checking what the antecedents are. Now that is, a money launderer trying to get rid of, he's sort of converted his illicit proceeds into property, and he's dumping it off to you. If you haven't done enough checking on that to find out, how he got that, you're guilty of, the crime of money laundering as well. So the acquisition, possession, or use of property, knowing at the time of its receipt that it was derived from a criminal offense or from participation in a crime. So these are the three definitions of money laundering. It's important that, so money laundering becomes quite wide-ranging. It's not just the money launderer, it's all those who assist him, it's those who take the final property from him, who think they're getting a good deal. All these people are involved in money laundering effectively. So it's pretty wide-ranging in that.
And this property in question could be real estate, this could be anything.
Anything. It could be anything. It could be a luxury car. So the guy gets a Mercedes Benz, drives it out of the showroom, gives it to you for half of what he's bought it at.
But that's very enticing, no? I mean, you get something for half the price. And
It is. But the fact is that you need to, so you might say, okay, I'm getting a good deal, let me just take it and keep quiet. But if the authorities get wind of it, if the money trail leads back to it and they say, well, didn't you think twice? Didn't you ask yourself, why am I getting such a good deal? Is it because I'm such a nice guy that he's giving it to me? So these are questions you need to ask yourself. So you are guilty, whether they actually follow through on it or not, you are guilty. So again, let's get to the next step of willful blindness. So willful blindness is when you turn a blind eye. You don't ask enough questions about it. So if you're a relationship manager at a bank and somebody comes and gives you $10 million, you don't even ask. You say, oh, wow, I'm getting $10 million. I'm building up a book, a good business. Take it. You have to ask, how did that money come? What are the source of funds? So you can't later on, when that is huge crime funds that have come in, and the authorities come to the bank and say, well, didn't you know this? Didn't you know that this has come from, that huge money laundering thing that took place, or this is drugs money. They've taken drugs that are killing people and they're depositing it with you. Didn't you ask enough questions? So you can't say that, well, I didn't know. You have to know. You have to know your client. If you don't do enough to know your client, you're guilty. So that's the concept of willful blindness.
Or the buyer you're buying from.
Yeah.
Like the seller you're buying from.
The seller you're buying from, you need to know. If something you're getting too good a deal, you need to ask yourself why.
Interesting. So, when you say willful, ignorance, if I may say, this happens a lot, I think, today specifically. We see n number of companies who are coming with offers which are unheard of.
Yeah.
So there was this case of Freedom 251. There was this mobile phone that supposedly So you think that these businesses that pop up sometimes, the sole objective behind them is to launder money?
So that's an interesting point that you make. Now, what tends to happen? Let's say, so with a lot of businesses, so a lot of very cash-intensive businesses are actually used by money launderers. Pizza chains, restaurants. This is where, they could show huge sales. They don't have any customers. You go to the restaurant's empty. There are no customers over there. But they're showing huge profits. Now that's because the money laundering syndicates are pumping in cash into that. They're going into this thing. So, as I said, this is something where, so a lot of business, there's a slide that I've got that I'm going to come to in a little while, where I show you the economic effects of, how that stifles the the real economy by, pushing resources towards businesses that don't make sense, the businesses that are losing money.
That brings me to a very interesting thing. So my knowledge of money laundering is only limited to the series that I've watched.
Yeah.
So I watched the series called as Ozark on Netflix.
Okay.
Where this money which was coming from drugs and all sorts of illicit trades was being washed through casino.
Okay.
Right. So, and the interesting thing was that the casino could not be on the land. It could not. So it had to be a floating.
Okay.
And I think that's why a lot of the casinos in Goa also are.
Yeah. That's a different rule. I think that's because you can't have gambling on the mainland. They have subsidy this thing. But casinos are used for money laundering all the time. So what happens is people take money. Let me just get to a little bit. We'll talk about these right now, but I want to just tell you the 3 stages of money laundering.
Yeah.
There is the first stage, which is placement, where you take the drugs off drugs money off the street, go deposit in banks. They have a case, all banks have reporting limits. So in the US, it's $10,000. So all these guys will deposit at $9,950. Go and do that differently and put the money. So that's the thing of where the money enters the financial system. That's called placement. Once it's in there, they'll move the money around. They'll move it, transfer it from you to him. He'll transfer to me. I'll transfer something back to him. He'll transfer to his wife. His wife will transfer to you. So you confuse the money trail. That's what the sort of stage of what they call layering. And then the final stage is integration, where the money gets taken out of the system to buy luxury goods or buy assets. So the smuggler buys a huge mansion somewhere. He buys a yacht. He buys an airplane. So that's the integration. So these are the three stages of money laundering. Now, what you're talking about, casinos. So I can go into a casino if I'm a money launderer, if I've got drug proceeds, if I got proceeds of crime. I'll go in there, take, $10,000, maybe $100,000, play big. And I'll play sort of something where I can bet. So like there's that roulette where you can bet on, red and white and red. I think the two.
The black and red.
Black and red.
Yeah.
So I'll put equal amount on red, equal amount on white. So when I lose there, I'll win here. And it makes the thing of, at the end of the day, I'll try and just take as much same money as I can back and say I've been gambling. And the casino then gives me a check for the thing. So I would buy the chips, take them, then take the chips back to him and get a check from the casino. So I have taken money that I got from my bank account somewhere, put it there, and then got money back from a casino. So I have effectively layered it because I've given a check here, I've got another check back. So, it's confusing, disguising the trail even more.
So you essentially go into a casino to lose.
Now, another way of doing it is sort of life insurance. Okay, you buy a huge insurance policy and then you cancel it and ask the guy to give you money back. Now, a lot of insurance companies have a free look-in period of 2 weeks or a month or something. So you try and cancel it before that, or there's a huge, sometimes you're getting a 30% hit on it. But people don't mind doing that because that's the cost of laundering the money. So they put 100 million in, they get 70 million back. That's, but 70 million is effectively clean money right now. So a lot of these, these are tricks that money launderers use. Another one that is there, maybe it's not so common here in India, but it's like travel agencies. So you've got some guy who says, okay, I've got a family of 100 people spread out around the world. We want to have a reunion in Bali. And I want to buy first class tickets for everybody. I'm booking the hotel. Everything is paid upfront. And now this thing is a month away. 1 week before that's supposed to happen, you call the travel agent and say, I've got to cancel. Sorry, we've had some unforeseen incident. Somebody has died, so we have to cancel this. So can you please refund it? Now, the interesting thing about this is the refunds will not come back to you, the guy who paid the money. It'll go to the beneficiary. So like that uncle who you said in New York will get the refund for his first class ticket. He never paid for it. That grandfather in Durban somewhere will get a refund for his first class ticket. He'll get a refund for his. So this is where I have paid out some money, and the travel agent is returning it out to people who I'd wanted to launder, send the money to. But I have effectively gone ahead and done some more concealment of the funds. Oh. So there's some very interesting ways that you can actually launder money. But
interesting.
So that's let's talk a little bit more about in money laundering. What you do is you try and you're placing the money. You're doing it in a way that it doesn't get detected. See, everybody knows exactly what the limits are, the cash reporting. So if it's a 10,000, if a bank tells, the banks have to file a cash transaction report for anything above 10,000. So everybody knows that. They'll come in just under that limit. they'll go and do it in about 25. So there's this actual stage over here where the structuring, $110,000 within the space between 10 a.m. and 3 p.m. were dumped by Smurfs into banks in Queens and Manhattan in one day. Just running around, they started somewhere. They would go, each guy had his amount of 9,500, 9,300 to go and put in there. He'd go to the next bank, go dump it there. So $110,000 was deposited, placed into the system in the space of 6 hours by this army of Smurfs running around. So that's how that was the old way of operating. Today, it's different sort of thing. So cryptocurrencies is something that people use. It's kind of, there's anonymity in there, so you can actually trace it back. So that's this other course, the other sort of certification that I promote. But it's pseudo-anonymous over there because all you don't have any names associated with in the blockchain. It's all numbers and formulae and letters that go in there. But what criminals try and do is keep ahead of. So you look at the intelligence thing. So the criminals are probably the most innovative. They would find new ways to do it. The bankers need to try and keep up. So they're something else, a new way of kind of laundering money comes in. They need to find that out. And the last people down the line are the regulators. They're the ones who would know last because they're still sort of doing some holeless things. So let's go back to now. In the thing of laundering money, there's something called the Financial Action Task Force, which is based in Paris. And countries that become members of the FATF have to commit to eradicating financial crime and money laundering over time. Now, it takes a long time for them to get everything. So there are three types they have to start first with financial institutions, banks, anybody that's directly in the business with any money. Then you have these non-bank financial institutions, things like money changers, when you go into
like a union money transfer.
These guys, MoneyGram and the other one. So these are the guys you're saying. And then there are things called designated non-financial business and profession, DNFBPs. These are things like jewelers, real estate, company secretaries, accountants, lawyers. These are guys who are helping people launder money. So, when this demonetization happened in 2016, one of the most popular ways of getting your cash laundered was you go to a jeweler. He would write a backdated receipt. You would buy jewelry from him. Just give all your 500 and 1,000 rupee notes to the guys. You sort of he'd show this thing. He'd go and sort of he'd say that this is money that was lying with me from these sales that I've made, and I will show the receipt. He'd show the bills to them and go deposit that. Jewelers and real estate. These are two of the biggest sources of money laundering in India. But India has been a FATF member since 2010. So we are committed that over time we will knock off these avenues. Now, the interesting thing is that it's taking time because some of the biggest launderers are the politicians. And it's in their interest not to, push for these changes. But ultimately, you have to. So look for real estate to get laundered, to get, scrutiny, under scrutiny more. You'll have, more regulation. You can't just accept, today, real estate transactions still take place 70% cash, 30% check. That's not going to fly down the road. When the FATF comes and they do a regular every 5 years they do an audit, they see how much you've moved. And we're at that point now where we have to start showing that, you can't show a jeweler sort of just taking cash and, converting those. Because at the end of the day, that demonetization failed completely. It didn't achieve anything. Because all the cash that was in there has come back into the system.
So is that a reason why real estate prices, like the circle rates, when we mentioned, is that the reason why they're going up in India?
So that could be one of the things, that you're now moving more towards more check, less cash. Circle rates were kept down because circle rates are based on the white component of a transaction. So circle rates will rise as that, 30-70 becomes 70-30 or 80-20 the other side.
All right. And interestingly, like you mentioned FATF. Now, I've been reading about Pakistan. And Pakistan and FATF seem to have this sort of a relationship where they're in news more often than not.
Yeah.
India, I think, also has that. And I'd ask you a couple of questions when it comes to the Malda gap, when it comes to, probably why the 5 rupee coins got vanished. And I have certain theories. I don't know whether they're right or not. So maybe, I'll share them and then you can comment on that.
Sure.
But first of all, I'd like to know the story with Pakistan and FATF. Like, what's happening?
Let's shift gears a little bit. So money laundering has always been this thing, but the FATF started focusing on terrorism as well, terrorism financing after 9/11. So a lot of the the FATF guidelines started including terrorism as well from 2001 onwards. Now, interestingly enough, so when you're doing money laundering, it's always with large amounts of money, and it's a circular thing. You keep using that same thing. So you launder the money, you get it out, you get the proceeds out. You use that same method, you push more money in, you churn it around, and you take it out. So it's money laundering tries to disguise the proceeds, the initial, proceeds, and then, they try and sort of move it around. And ultimately, when you've got clean money out, you're happy to show it to the world because you say that, this is my money. This is what I bought this yacht with money that the casino, I won money in the casino, they paid it to me, and I sort of bought a yacht with it. Now, in terrorism financing, it can be both clean and dirty money that goes into it, that is, involved in there. So they use the same methods as money launderers use, but there is a question of trying to disguise the act from the actual sort of proceeds. So they don't want people to know that this sort of respectable person paid something that was then used to buy a bomb to, bring down a plane. So that's kind of, so they have to sort of work towards it. Now, while money laundering is circular, terrorism financing is kind of linear. It's like you sort of put in the money, you train the guys, they commit the act, most of the time they die. So it's like the act has happened, and that's it. Those guys are dead, they can't be used anymore. So that's one of the interesting points about terrorism financing is that it doesn't take a lot of money to commit a terrorism act. So I'm going to ask you, so if you think about 9/11, you think about something that happened that shook the world up. Do you have any sense of how much money was actually spent?
All right, so this is an analysis question. See, the plane wasn't theirs, right? I think all they had to do was probably buy tickets, a couple of weapons, maybe train them. So not more than maybe $100,000.
So close. I mean, it was about $300,000. So normally when you think of something like that, you would think that, it would be a 10 million to 50 million that was spent on it.
Yeah.
9/11 cost $300,000. It was just, a few ATM transactions, getting them their food and, drinks, their food and, living expenses while they were in the US. And at the end, these guys died. There's nothing to be paid out. Maybe their families were taken care of, but there was no big payouts to them. They're dead. They're gone. But so with terrorism financing, it becomes even more difficult to detect because it's not large numbers. It's very small things. So terrorism financing, you have to look at the pattern. So it becomes, and that's where you have to be extremely vigilant as a banker, as anybody who's involved in this, to sort of get for it. So getting back to the question with FATF and Pakistan. Pakistan, I guess, it's safe to say that I think everybody knows well enough that they sponsor terrorism. And the reason that they don't get off the FATF grey list is they don't do it. They don't stop it. That's the way that they've been doing. So that's why Pakistan will probably always be on the FATF grey list. And what happens is, so now the interesting thing about the FATF is it's not a sanctioning authority. It can't fine you if you don't sort of follow. But what tends to happen is if you fall afoul of the FATF, then you get known as the country that sponsors terrorism, the country that's, a haven for money laundering, and legitimate banks stop doing business with you. So it becomes very difficult for you to do business out in the world. So, when you've got, there's in business, so there is something called correspondent banking, where a correspondent bank gives a bank in this country access to the US markets, even though they may not have a presence there. So if you have a US bank who's your correspondent bank, your customers here can do business in US dollars. If correspondent banks cut you off, then Pakistan will have a hard time doing business in the US, they'll have a hard time doing business in the UK, they'll have a hard time doing business in Europe. And that's what the FATF grey list does to you.
Interesting. So you mentioned demonetization and you mentioned its failure. From what I understand, one of the objectives of demonetization was to also curb this funding of terrorism that was happening from India. Has it been a failure in that respect?
Very hard to say. I don't know, if you look at it from the point of view of the main objective was to reduce the cash flow in the system and move towards more, cashless transactions. I don't think that hasn't happened. The amount of cash is back in the system. To a certain extent, what was happening was, and this is, I can't say for sure, but there's talk that there were fake currency notes that were coming in. A lot of these 500 and 1,000 rupee notes were fake notes. So one of the things was to flush them out and then have these genuine notes. So to a certain extent, it may have curbed that a bit, but has it stopped the flow? I don't know. Until we have fewer terrorists, terrorists, we say, okay, terrorism is stopped, but something else comes up along somewhere there. So I don't know whether it's hard. The jury is still out on that. Maybe we put a dent in those guys, but then they get smart and figure out a new way to do it. So this was a good, maybe a sort of innovative way of curbing it at that point in time, but you have to then keep staying ahead of the curve and keep at it.
Sorry. So there's something that I've heard from a number of people, either in the services or in the circles close to the government. And please correct me if I'm wrong. So they said that if you notice that there used to be these 5 rupee old coins that used to be thick, and they've stopped, they've vanished. Like you don't see them anymore. And if you see them, you don't see them in circulation that often. The reason that I was given was that 5 rupee coin, if you melt it, because that has some intrinsic value, you could get metal out of it, you could make blades out of it, and you could sell that 5 rupee metal for maybe 11, 12, 13 rupees, and in a sense you've created 7 to 8 rupees out of thin air.
Yeah.
And that was used to fund terrorists coming in from northeast, and maybe the terrorists which were coming from the Malda Gap. And Malda Gap in India was specifically used for money laundering.
Okay.
So what is your view on that?
So again, I don't have the definitive answer on it, but if I were to just give you an intelligent guess, you look at these 5 rupee coins came out 20 years ago when the price of silver was, down there. So at that point, when the 5 rupee coins came out, the silver they had in them was equivalent to 5 rupees or less. Now, that 5 rupees is still 5 rupees, but the value of the silver in there has gone higher because the price of silver has gone up. So it's inflation that has actually made that the silver value of that maybe 8 rupees. So then it makes sense to melt that down and do it. So again, I don't know for sure, but that would be my logical answer to sort of put that in. So anything that's a coin where it's backed up by a certain value, it is a thing. Now, when you've got paper money, it's paper. It's not, unless the value of paper goes through the roof, you've got to keep using it as paper.
Interesting. So you also mentioned that you work with the Swiss bank. A very interesting story. This happened in 2011. Me being the curious child I was at that point, I was in Switzerland for a conference in Zurich, and I just tried visiting a Swiss bank. And I know nobody would take me seriously at that point, but I asked them, I'd like to open a bank account.
Yeah.
I mean, it was but obvious that they looked at me and laughed. But do you think they would entertain anyone just like that, or there is a whole mechanism of a reference, and how do you go about it? Are US citizens allowed to open a bank there, bank account there? How does it go like?
So let me tell you, since I had worked in Swiss banking, so Swiss banking came about initially to hide Nazi money in World War II. So that, Switzerland was a neutral country. The Nazis running away at the end of the war needed a place, a safe, something that they could sing. So Swiss gave them confidentiality and took the money in. So Switzerland has always sort of said that we are neutral and we are, we don't sort of distinguish between good guys and bad guys. To us, everybody is good. But they had certain sort of strange rules where up until about 2010 or so, the Swiss used to openly say that as far as we're concerned, tax evasion is not a crime in our books. You evade taxes in your country and you bring that to us, we'd be happy to have your money because we don't look at that as a crime. So that's why everybody looking to evade taxes, to sort of not pay their taxes and hide that money, Switzerland was happy to take it. So they were doing their reference checks, but if that's, you go and tell them that here's money that I didn't pay taxes in India, I'm giving it to you, happy to take it. Now, that changed with the global financial crisis in 2008. And you bring up USA. So the US has now made it something for a country taking in USA. If you're going to take a US citizen's money, you need to fulfill this criteria, you need to report to us. If you don't, you're in violation of our rules and we will hit you with sanctions. So this started happening, and then that whole Swiss banking model went for toss. The Swiss do not say, in fact, they don't even take they have to be very careful about taking in laundered money. They've got a lot of it still lying in there as legacy issues, but they can't tell you that, you want to evade tax in your country, bring your money to us. That doesn't work anymore with them. That model has changed. They still maintain that thing about secrecy. They say that, our model is that we give you complete confidentiality. So as long as you're doing it for the right reasons, you're hiding the thing, you don't want the bad guys to know you've got so much money so they can come after you. So the whole thing has changed a bit, but there's still a very gray area. So the Swiss banking model, so all these banks are struggling. Credit Suisse gets hit with fines every day. UBS, the same. So, and then these smaller Swiss banks also. For them, doing business now is much more difficult than it used to be 10 years, 15 years ago.
So that's changed in terms of the banking sector.
So if you want to open a Swiss bank account, they would first ask you why. What is it, why are you hiding or why do you want to?
Yeah.
Yeah.
So that due diligence now comes into
Yeah,
picture.
yeah.
Very interesting. So you mentioned tax evasion. So then in India there is this discussion when it comes to tax evasion, tax terrorism. Where there were these officers who would sometimes harass.
Yeah.
And then the government tried to say that, until and unless required, an officer is not required to go intervene in person.
Yeah. Yeah.
That has definitely helped to a certain extent. But at the same time, people often complain, and I hear so many people complaining, like, parents of my students. Oh, the tax in India is so much.
Yeah.
Do you concur with it? Because when it comes to developed nations, right, we see that in US the tax rates are much higher. Yes, there was a time in India, I think this was during Indira Gandhi's time, when the net effective tax was around 95, 97%, if I'm not wrong.
It was huge, yeah. It was
Yeah.
easy. No, our tax rates are very reasonable. I don't think anybody has should, in their right mind, complain about direct taxes. Now, we have very high indirect taxes, which is another story. But in terms of direct taxes, they're very reasonable. Now, the point is that even though our direct tax rates are very reasonable, we still have people who hardly pay any tax. So most businessmen try and find ways to get out of it and thing. So what tends to happen is that we have the situation right now where, say my family, my father and his two sisters, they sold an ancestral property for a very large amount. Now, they are allowed to put that proceeds into another property or into capital gains bonds. But the CA told them that you better make sure you have all the T's crossed and all the I's dotted, because the tax authorities will come after you. They don't, and these are all, people who've been in service, who've paid their taxes honestly all along. But anytime there's a big transaction, and the reason for this is that most businessmen pay very little taxes. They find ways to, think they can write off this and that. So anytime, it's just that with the tax authorities, they get to the point where they see something big, they will ask questions. So that's, I guess you call it tax terrorism, but they will. And certain times, I think there are many cases I've heard where they actually harass you. You have to then sort of just pay them off to get out of it. But that's an unfortunate fact of the thing. But getting back to it, I was working. I have a sole proprietorship, the last 12 years, and I've been able to be much more tax efficient. So I got a letter from Calcutta where my taxes are filed, where they say that, you pay 10 lakhs of tax, you're one of the highest taxpayers. So I said, wow, so that's very strange. In fact, if I'm paying this much and they're saying that I'm one of the highest, then it just means that most guys who are earning much more than me are just not paying it at all. So I think to a certain extent that goes back that the fault is on us, that we are too clever. If everybody paid their taxes honestly, there wouldn't be an issue.
Interesting. So there's also a lot of money laundering hubs around the world.
Yeah.
For example, London used to be one, and they're trying to shed that image, and then there are a number of things that have happened. Mauritius, Singapore, for example.
Yeah.
A lot of startups. So interestingly, we had a story. Somebody offered us to take their money. The condition was that you have to set up your company outside of India, most likely in Singapore.
Okay.
Now, I feel that sort of happens. But at the same time, right now, there is that discussion of a minimum corporate tax.
Yeah. So that I think I would say it wouldn't be fair to call Singapore a money laundering hub. It's just that it's a low tax country. So that the tax rate there is 15% versus 30% here and 40% in the US. So it's a tax efficient. So what you're doing is you're doing tax arbitrage by taking advantage of lower taxes set up there. Mauritius, on the other hand, is known for allowing round tripping. So that's, businessmen send their money there, bring it in through a vehicle registered in Mauritius and bring it back here. So that again, that's money laundering happening over there. Singapore would not allow blatant money laundering to happen, but there it's tax efficiency that we're seeing over there.
So, but that tax efficiency is going to go out of the window when we are talking about this minimum corporate tax?
Yeah. So that, to a certain extent, depends on what that minimum, if the minimum tax is higher than their tax rate, it will affect them.
Which I think they're saying 25%.
Yeah. So if 25%, then it brings us at par with India, which is 30%.
Yeah. So that's going to change the dynamics of...
It should. Unless people find new ways to get around it. So, as I said, people are always, cleverer and they find ways to avoid it.
Wow. Interesting. So I know this conversation has been very candid, and I'm sure that you must be having certain other things that I've not allowed you to.
No, I think I pretty much I've covered most of it. It's just so essentially what it is that fighting financial crime is extremely important, and what it is, it's like when you've got dirty money, it's not just a question of that guy having laundered money and made it clean. It's how did he get that money? Did he sell drugs to people and kill a lot of people on the street, the vice of the thing? So the ill effects, the social effects of crime are what you need to look at. You got to look at things like when you've got that restaurant using laundered money. So it is a restaurant that shouldn't be in business, but it's driving out other restaurants that could compete, the guys who are doing business fairly. By these guys stay up, they might serve substandard food, but they stay in business while these guys, and they reduce prices and knock these guys out. So that microeconomic effect of money laundering. So there are a lot of these distortions that happen, which one doesn't think about. But these are things to also bear in mind. So, when I sort of joined this whole thing for 13 years ago, I wasn't exactly sure what I was getting into, but having seen these things, it makes you want to sort of do things the right way. That's why, I found that bankers were getting very greedy. They were just pushing this thing. Now they are being told themselves to, banks have been hammered a lot in the last 12 to 15 years. And that'll continue until they learn to figure out how to sort of do the correct type of business.
Wow. Very interesting, sir. Now, sir, drifting away from this academic sort of a conversation, I want to know a little bit about your school life, because a lot of our students, the community, also come from schools. If you could just shed some light. So I think you've been...
So I was in boarding school. I was in the Doon School in Dehradun. I left home when I was 11 years old. And so it was an interesting... I think that, it was great for me. Now, unfortunately, my children themselves didn't go to boarding school. My son, has a sort of Asperger's, autism, so he couldn't be accommodated in, that kind of environment. But he now keeps telling me, I wish I had gone to Doon School. I wish I had this thing. But so he realizes what he's missed out on. I think it's a great. So what boarding schools did was they made you all-round people. You weren't necessarily good at academics. So, so academics, so in fact, these boarding schools never churned out the toppers in ISC, ICSE. You wouldn't have the guys getting, the 99.99% guy wouldn't come from the Doon School or Mayo College. But the guy who came out of there was somebody who could hold his own in the real world. And, it's very important. So one thing that I would tell your students is don't focus only on studies. Focus on extracurriculars, focus on sports, get a full rounding. Don't just, I was having a discussion with somebody the other day about these IIT, Agarwal classes and all these things that, prepare you for this. I'm saying that why would anybody want to be something like that? You get in there, you go learn 18 hours a day, you're just studying, you're just preparing. You come out like a robot with the answers, but you haven't learned about life. So it's very important to get that full all-round, experience as you're growing up. You only grow up once. Don't miss out on that.
That emotional quotient, that social quotient,
Yes.
I think that is what teaches you a lot.
Yeah.
So that's very interesting. Now that also brings me to something that we do with our students, and we call it learnacy,
Okay.
which is when we say literacy is the ability to read and write.
Yeah.
So the ability to constantly learn should be called learnacy. We have workshops that go on and with this particular mindset, and we have a set, coursework. But that said, I want to take your 2 cents for our student community, for not just the student community, the overall One Young India community, as to what it means to be a lifelong learner and why is it essential and how should we approach it.
So again, I maybe didn't pay enough attention to this when I was growing up. So we would just do the thing, get through the academics, focus on other things. But I think it's very important to be curious, to want to learn more. And you realize this, that learning never stops. I did a certification, I'm now 57, I'll be 58 in a couple of months, 3 years ago. So 55 years old, I'm still, doing certifications because that learning never stops. It's extremely important, whatever you're passionate about, whatever you're curious about, follow through on it. Take that. You can't go wrong finding out more. At the end of the day, you might find that, okay, I did all this learning, but this particular stuff never mind. It's stuff that you never know when you can use that to your advantage. Learning never stops.
Interesting. Yeah. That's very wise words. Because typically what I see is that there would be a student who has taken, let's say, a sciences in grade 11 and 12, and they'd say, why do I need to learn about politics? Why do I need to learn about economics? Similarly, there would be somebody who has taken economics or let's say a commerce background. They'd say, oh, why do I need to learn about science and tech? Why do I need to learn about what is quantum computing? So I think that line is sort of blurring now.
Yeah.
And the more you mature into a career, you realize that everything is connected, and eventually it's your ability to connect the dots that matters.
Exactly. The thing is that I look back on something that I learned in biology class when I was in class 10. But these are things that when you're not well, and you've got to sort of figure out, then you connect back that, okay, this is what possibly I could do to sort of, and a lot of the times it's your own common sense that you say, okay, if my liver is sort of acting up, I can sort of tell that I better stop drinking a little bit now.
Yeah.
So
interesting. So it's been a wonderful conversation.
No, thank you, Swagat. It's been a pleasure doing this, and look forward to hearing back from the feedback that you get on this.
No, I'm sure this is going to be fantastic. But thank you so much for your time.
Sure.
I know that you're typically very busy, and the knowledge that you've shared with us today has been of immense help to me, and I hope that our student community also takes the most out of it. Thank you so much for your time once again.
Thank you, Swagat. Thanks. Okay. Thank you.